Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TRAD interim report. China Traditional Chinese Medicine Holdings, Co. Limited, offers a diverse range of businesses and services, including research and development, production, and sale of traditional Chinese medicine, TCM, and pharmaceutical products, manufacturing and management of concentrated TCM granules, TCM healthcare products, and decoction pieces, sale of TCM finished drugs, provision of Chinese medical-related healthcare solutions, plus Chinese medical consultation and diagnosis, plus TCM physiotherapy, plus prescription with concentrated TCM granules, TCM decoction pieces, and TCM healthcare product, retail sale of pharmaceuticals and decoction pharmaceuticals, trading of pharmaceutical products, investment in the TCM health industry, sale of medical herbs, marketing, advertising, and consulting services for TCM property, leasing activities. The significant drop in China Traditional Chinese Medicine Holdings Co. Limited stock price can be attributed to several key factors. A 2024 full-year profit warning issued by the company forecasted a substantial decline in profit due to price cuts, heightened market competition, and increased costs. This was followed by another profit warning in July 2025, citing lower revenue and profitability in its TCM granules business and goodwill impairment provisions. The interim results for HON 2025 announced a shareholder attributable loss of 108 million yuan, a decrease in revenue, and a shift from profit to loss in the same period last year. The company's efforts to optimize its business structure, focus on traditional Chinese medicinal materials, and reduce low-margin businesses have contributed to these losses. These financial announcements have collectively led to a significant drop in the company's stock price of over 45% in the past year, with TradingView reporting a minus 45.16% decrease, and Morningstar showing a minus 43.04% one-year trailing return as of September 26, 2025. The primary drivers of revenue growth or decline for the company are multifaceted. On one hand, key factors contributing to revenue growth include the expansion of good agricultural practice, GAP, for Chinese medicinal herbs, increased production and sales of TCM decoction pieces, and successful centralized procurement strategies. Additionally, market penetration through the one person, one hospital, one benchmark project and growing market positions for key varieties have also contributed to revenue growth. On the other hand, factors driving revenue decline include intensified market competition, price reductions for centralized procurement, and rising costs. The decrease in revenue from Chinese medicinal herbs integration business, concentrated TCM granules business, and TCM Great Health business has also significantly impacted revenue. Furthermore, narrowed growth potential of brick-and-mortar pharmacy retail market due to overall outpatient planning, medical insurance policy adjustments, and online sales diversion have also contributed to the decline. Overall, the company's revenue growth is driven by strategic initiatives such as centralized procurement, digital transformation, and product variety expansion, while revenue decline is largely attributed to market competition, price fluctuations, and shifting business focus. Net income decreased by 10.5%, primarily due to price reductions, rising costs, and intensified market competition. The impairment loss of goodwill allocated to the Jiangyan Tianjiang CGU also contributed to a decrease in net income of RMB 242,461,000. Profit margins experienced mixed results. Gross profit margin increased by 0.3 percentage points to 48.7%, but this was largely due to a decline in concentrated TCM granules business. However, the Chinese medicinal herbs integration business drove an increase in profit margins by 1.4 percentage points from 8.4% to 9.8%. In contrast, the concentrated TCM granules segment saw a decrease in profit margins. The overall trend suggests that while some segments experienced increases in profit margins, others faced declines due to various factors such as production process improvements and quality management demands. The company's financial performance indicates a consistent generation of positive operating cash flow. In both 2025 and 2024, the net cash flows generated from operating activities were substantial, with RMB 924,863 in 2025 and RMB 569,701 in 2024. This trend suggests that the company is efficiently managing its operations to produce a steady stream of positive cash flow. The company's debt level has undergone significant changes over the past year. While there have been instances of decreases, such as a 49.6% drop in total non-current liabilities and a decrease in interest expenses by 35,283, other indicators show an increase in debt levels. For instance, current liabilities increased by RM$649,155, and new bank and other borrowings raised were higher than repayments made. Additionally, the company's debt level rose from RM$62,648,000 to RM$108,693,000, indicating a net increase of RM$46,045,000 in debt. The interest expenses also show mixed results, with some areas experiencing decreases and others increases. The company's financial performance reveals a mixed picture across various segments and regions. On the positive side, China's TCM Great Health Industry has been a standout performer, with notable contributions from Guangdong Province, as well as Jiangyin, Shandong, and Hebei provinces. The MediWorld, Yifang, and Tongjiatang segments have also shown strong performance. However, some regions and segments have underperformed. Specifically, the Tianjiang segment has struggled to meet expectations. Overall, while there are pockets of success, the company still faces challenges in certain areas that need attention. Management is optimistic about the company's outlook, highlighting several key strategies for growth. The focus will be on research and development of traditional Chinese medicine, TCM products, with an emphasis on improving product quality and governance through scientific evaluation and planning. The company aims to embed environmental, social, and governance (ESG) principles into its corporate strategy, strengthening its foundation for high-quality development. Additionally, management is prioritizing internal control and risk prevention mechanisms to ensure stability. In terms of operations, the company plans to rapidly construct a leading TCM industrial cluster through specialized management and coordination. This will involve improving internal industrial chain coordination and connections to enhance efficiency and reduce costs. Ultimately, management seeks to shift the development model from scale-oriented growth to value creation, positioning the company for long-term success. There were no notable acquisitions or divestitures in this period, as indicated by the financial summary on page 55. This suggests a stable and unchanged business structure, with no significant changes in assets or ownership. The company has indeed paid dividends to its shareholders. This is evident from two separate sources, page 34, which mentions a final dividend and special dividend distribution of RMB 397,482, and page 46, which explicitly confirms the payment of dividends. Concerns surrounding inventory buildup and supply chain disruption. A review of the financial summary reveals concerns about inventory buildup. Notably, inventory levels have seen a significant increase from December 31, 2024 to June 30, 2025, rising by RMB 884,513. Furthermore, the provision for inventories write-down has also increased substantially by RMB 11,335,000. These developments suggest potential issues with supply chain management and inventory control, which may have implications for future financial performance. That concludes the financial summary for TRAD Chi Med. Feel free to comment below, and I will be happy to answer them when possible.